Welcome back. All right, many people experienced economic shocks in 2020, from job losses to businesses that were forced to close. Well, now that the new year is upon us, it's time to look forward to what perhaps you can expect financially this year. So we turn to our expert for more on this. President and CEO Brent Wilsey of Wilsey Management is joining us live via Zoom. Good morning, Brent. Happy New Year.
Happy New Year, Liz. Good morning.
All right, here we are. It's a new year, and we're really hoping for positive things in terms of finances. You know, where do we start? I was thinking maybe we could do it like a review of, it was really tough last year on many different levels.
Yeah, it really is. And it's hard to know where you're going if you don't know where you've been. And 2020 was just a crazy year to where we had the economy shut down. We've had, these companies like Amazon and Tesla just zoomed through the roof. We had 500 IPOs last year. Some were small that people not known of. But it was a very difficult year. We also had a weakening dollar, which concerned people. But that set up 2021, I believe, for a very, very good year for everybody. But it will be a volatile year. So we got to kind of look forward to things like interest rates, inflation, and so forth.
Yeah, so are you expecting interest rates to start to creep up and inflation to also happen?
Yes, so we do see interest rate. I mean, right now, the 10-year treasury is about 0.91%. We do see that going up to about 1.4%. Now, not all at once. That will be by the end of the year. And that will cause some problems for bond investors, as they will see their portfolio go down in value. Rates go up, bonds go down. And this also is going to be affected by inflation. And inflation is one thing that people are kind of prepared for, but not really, because what we're going to have is we are going to see the reopening of the economy. And there's a lot of money out there. There's about $25 trillion sitting in liquid accounts. People have saved more money than ever. As we open the economy, we're going to start seeing shortages because the manufacturing won't keep pace with what people are buying. And inflation is too much money chasing too few goods. So we could see inflation rise above 2%, which could be a problem because the Federal Reserve has said they want to keep that target at 2%. So I do believe we'll see rising inflation, and not 3 or 4%, but we could see 2 to 3%, which could be a problem, and interest rates rising to about 1.5% by the end of the year.
By the end of the year, you're saying. Speaking of rising, the housing market comes to mind because this last year, we saw the housing market climb. My question then becomes, do you think that the housing market will continue to climb, or will it kind of stable off?
Well, there are some headwinds for housing, and 2020 was a great year for housing. We saw housing prices across the nation up, almost 10%. But that's a good thing, but it's also a problem. Now, we did see equity increase for homeowners by about $1 trillion. There's a lot of equity out there. The problem is inventories nationwide, and even here in San Diego, are very low. They're only about 2 to 3 months, making an average of above 6 per month is the norm. So 2 to 3 months is very, very low. And what we're also seeing is that, Liz, back in 2012, the average mortgage payment was $750. That is now doubled to $1,500, even with lower interest rates. But think about rates going up, as I just said. That means rising mortgage payments. Also, too, what you're going to have is rising prices, the low inventory. And what's really happening is wages are not keeping up anywhere near as fast as home prices are increasing. So we're going to see, I believe, maybe the first quarter could be okay, but then we could see a tapering or a flattening of that, perhaps a decline later by the end of the year because of no one can afford the homes and they have to come down.
Yeah, it's an interesting scenario when we talk specifically the housing market, when the price is really high, usually the interest rate is on the lower side, and then when you start to see the interest rate go up, the houses the home prices usually tend to level off. Usually, I mean, that's kind of what the trend has been over several years, but we'll see. But lastly, I know you touched on it. You said the equities could return to normal, right?
Yes, I think we're going to see less of the high flyers, and we could see some of these high flyers because nothing goes to the moon. We could see, and I'm not going to predict when, but things are too pricey on some of these companies. They will have to have some type of pullback, and I think it could happen in 2021. We will see some additional IPOs this year. We will see ones from Instacart, Robinhood, even Compass, which is a real estate company. So you will see more IPOs. but you got to be very careful investing this year. What happened at work last year in 2020, I don't believe is going to work in 2021. What should benefit from rising interest rates are financials. They should do very well this year. Also, too, we're looking at office REITs because we do believe in office REITs or real estate investment trust, is that we do believe that people will start coming back to the offices, and that could help them out tremendously. And then lastly, retailers. Now, you got to be very careful with retailers because there's some good ones out there and some bad ones. I just read in the Wall Street Journal how Nordstrom is prepared to turn around and have all the positive things for it. So the right retailers can do very well, and you can also pick up some good dividends from them as well. So that's what I'd be looking at. And then also, too, I don't want to forget about energy. Usually when the economy rebounds and comes back and starts growing again, energy usually does well. But again, be very careful. And sometimes some of these things are already baked into the price already. So you got to really dig deep to find those value investments.
Always great to talk to you, Brent Wilsey. Thank you so much. Have a great Sunday. Happy New Year once again. And we'll be right back.